Hey there, business owners and entrepreneurs. Welcome back to my channel, where we talk about all things taxes, business, and finances. Today, we're diving into a hot topic: how to properly write off vehicle expenses for your business. If you've ever wondered what you need to track or how to maximize your deductions, you're in the right place. Let's get started. Alright, so you use your car for business, right? Maybe you're meeting clients, driving to job sites, or even just running errands for your company. That mileage adds up. The good news is, the IRS lets you deduct those expenses, which puts money back in your pocket. Now, there are two main ways to do this: the standard mileage rate or the actual expense method. Don't worry, we'll break down both so you can choose the best option for your situation. The standard mileage rate is like a flat fee per mile driven for business. For 2023, it's 65.5 cents per mile. So, let's say you drive 10,000 miles for business this year. That's a potential deduction of $6,550. Not bad, right? On the other hand, the actual expense method lets you deduct the real costs you incur for things like gas, repairs, insurance, and even depreciation. But here's the catch: you can only deduct the portion used for business. We'll dive deeper into that later. Which method is right for you? Well, it depends on your individual circumstances. If you have a fuel-efficient car and don't drive a ton for business, the standard mileage rate might be the way to go. But if you have a gas guzzler or rack up a lot of business miles, the actual expense method could lead to bigger savings. The key takeaway here is that you have options. Don't leave money on the table by ignoring these deductions. Look, I get it. Nobody likes paperwork. But trust me on this one. Keeping a mileage log is crucial if you want to claim those vehicle expenses. Think of it like this: it's your proof for the IRS. Without it, you're basically throwing money away. So what goes into a mileage log? It's simpler than you might think. For every single business trip, you need to record the date, your starting and ending odometer readings, the purpose of the trip, be specific, and your destination. That's it. Now I know what you're thinking. Graham, I'm not carrying around a notebook and pen everywhere I go. And you know what? You don't have to. There are tons of amazing mileage tracking apps out there that make this process a breeze. Seriously, these apps are game changers. They automatically track your trips in the background, and some even use GPS to differentiate between business and personal driving. Talk about making your life easier. Some popular options include MileAQ, Everlance, and TripLog. Do your research and find one that fits your needs. Remember, the IRS loves documentation. A detailed mileage log is your best friend when it comes to claiming those vehicle expenses. Don't skip this step. Alright, so you've decided to go with the actual expense method. That means it's time to channel your inner organizer and start saving those receipts. Seriously, every little bit counts when it comes to maximizing your deductions. We're talking gas receipts, maintenance records, repair bills, insurance payments, you name it. If it's related to your vehicle and you use it for business, hang on to that receipt like your financial life depends on it. Now I know what you're thinking. Graham, my wallet is already overflowing with receipts. I hear you. That's why I recommend going digital. There are some fantastic expense tracking apps out there, like Expensify, that let you scan and store your receipts electronically. No more faded ink or lost receipts. Plus, many of these apps integrate seamlessly with accounting software, making tax time a whole lot less painful. Remember, organization is key when it comes to deducting actual vehicle expenses. Set up a system that works for you, whether it's a dedicated folder for paper receipts or a digital tracking app. Your future self will thank you. Let's be real. Most of us use our vehicles for both business and personal use, and that's totally fine. The key is to clearly separate those expenses. The IRS is watching, and you don't want to raise any red flags. Think of it like this: your car is like a pie chart. The business portion is deductible, while the personal portion is not. Your job is to accurately calculate those percentages. So how do you do that? It all comes back to that trusty mileage log. By tracking your business and personal miles, you can determine the percentage of time your vehicle is used for business. For example, let's say you drove a total of 12,000 miles last year. Out of those, 7,200 miles were for business purposes. That means your business use percentage is 60%. Now, let's say your total vehicle expenses for the year were $6,000. You can deduct 60% of that amount, which comes out to $3,600. See how important that mileage log is? Remember, accuracy is key when it comes to separating business and personal vehicle use. Don't estimate or guesstimate, track those miles diligently. Chapter 5. How long to keep records? Don't throw that away. Okay, so you've diligently tracked your mileage, saved all your receipts, and separated your business and personal expenses. You're basically a tax-deductible superhero. But hold on, don't celebrate just yet. You still need to know how long to keep all those records. Here's the deal. The IRS has up to 3 years to audit your tax return. That means you need to keep all your vehicle expense documentation for at least 3 years from the date you filed your return. Yes, that includes those faded gas station receipts. Now, I know what you're thinking. Graham, my home office is already overflowing with paperwork. I hear you. That's why I recommend going digital whenever possible. Scan those receipts, back up those spreadsheets, and store everything in a safe and secure location. Remember, it's always better to be safe than sorry. Keep those records organized and accessible, and you'll be prepared for anything the IRS throws your way. Chapter 6. Common mistakes to avoid. Don't make these errors. Alright, we've covered a lot of ground today. You're well on your way to becoming a vehicle expense deduction expert. But before we wrap up, let's go over some common mistakes people make. Avoid these pitfalls and you'll be golden. Mistake number 1. Not tracking mileage consistently. This is by far the biggest mistake people make. Life gets busy, and it's easy to forget to log a trip here and there. But those forgotten miles add up quickly. Set yourself a reminder, use a tracking app, or make it a habit to log your mileage every single day. Mistake number 2. Mixing personal and business expenses. We talked about this earlier, but it's worth repeating. Keep those categories separate. Don't make the IRS's job harder than it needs to be. Mistake number 3. Not saving receipts. This one is a classic. You get back from a business trip, stuff those receipts in your glove compartment, and promptly forget about them. Don't let this happen to you. Develop a system for storing your receipts, whether it's a dedicated folder or a digital tracking app. Remember, claiming vehicle expenses is your right as a business owner. Don't let these common mistakes cost you money. There you have it, folks. Now you know how to write off your vehicle expenses like a pro. Remember, it all comes down to good record keeping. Track those miles, save those receipts, and keep everything organized. Your wallet will thank you. If you have any questions or need help navigating this process, drop them in the comments below. I'm here to help you make the most of your deductions. And hey, while you're down there, don't forget to hit that like button and subscribe to the channel for more money-saving tips. Sharing is caring, so spread the wealth and pass this video along to your fellow entrepreneurs. Thanks for watching, and I'll catch you in the next one.